Good morning, traders. I want to talk to you about back testing this morning. See all these lines I got on here. I'm going to move back to where the lines begin. I did a bunch of back testing this weekend. I made it back this far. But what I'm doing specifically here is I have this issue with wanting every trade to be a 300-point move that I can make wonderful money on every single time. And I do it every time I click the mouse button. I'm thinking, this is it. This is the one that's going to pay me my retirement goal. And it's just not feasible that that's going to happen. So I was trying to get an average of when we do see one of these reversal signals, because the signals are wonderful, what can I reasonably expect the market to move? I mean, how far can I reasonably expect it to move? And so that's what I've been doing. I've got it on a 1-minute chart, regular trading hours only. So it's going to be New York session. And I'm just going through here and marking the highs and the lows and seeing what kind of a move I can expect. Even on a directional day, like this one's pretty much a directional day like Friday was. So one thing I did notice right away, whatever move we make in the morning, I mean, just as soon as we open, whatever type of move we make, you can mark out a breaker off of it. And then when it validates, if it validates with a fair value gap, it will oftentimes be the first move of the day. Okay, so here we come up, come down, we take out some liquidity, we go back up, and we rip back down. So a lot of times I would say like maybe this one, but in this case we didn't start moving one direction yet. So here we come back down, we filled this gap. This candle is green, so it's a last down close, but it's also reversed right back up. So that's some sort of a signal. I don't know what it is, but say we just see that when we mark it, we go ahead and mark it out. I'm just going to make all these one color. I'm not going to differentiate just for the interest of time. So we would go ahead and mark that one out there. And we wait for it to validate. The validate would be candle bodies closing above and a fair value gap pulling away. And so far we finally got one right here. We got a little fair value gap right there. Candle bodies are closing above. So you could enter right there. And I've been using this little tool here. So our entry would be one tick above the bottom of this red candle. And our stop is going to be 25 points. So right there, just a static 25 points. And then the high of the day is right there. So if we just look at the high of the day, let's see, I think that one's just, yeah. So this took the high of the day. That's 55 points, okay? Right there off the high of the day. I don't know how often, the ones I've been looking at as I've been back testing have been pretty good. You'll get a move off of that first little breaker if it validates. So 50 points right there. Okay, so from there on up, we go all the way up here, and we have this breaker right there. Highest point is this guy here, so it'd be this one. The last down close before the high point. So we can put a line on that. Right here. There we go. That's not 100% right on the tip of that line, but I'll adjust it. Okay, so now we would be waiting for candle bodies to close below. So here they are closing below. And then we would need a fair value gap. Don't have one yet. We come up, we try to make a new high, but we don't. And then we have a little fair value gap here. We start pulling away. If you put your entry one tick above this candle, below this candle's high, then we would get filled on this run up. So as this is all forming, you're thinking, okay, well, what kind of size can I put on here? You would measure it. Go ahead and measure from where you would enter up to the high. That's 19 points to this high is what I'm looking at. I guess I could move it that direction. It's 19 points. So one tick below there, and then up to this high. So when I'm looking, the highest high is 18 points. So that's well within your 25-point stop loss when you get filled there. So go ahead and put that order in, a limit order. If we come back up to that one tick below the high of this candle, then you're good to go. And so it fills you, leaves all the highs, and then we fall out of bed. And how much move can we reasonably expect to get on something like that? So we use the measuring tool again. There's our entry right there. And we'll just drag it all the way down to the bottom. And that is 76 points. And our stop loss, of course, we already measured, would be 25. It would never get hit. You can move it down a little lower if you wanted to, but so there's 78 points. So here we had 55 points to the high. I don't know where you'd want to be aiming here. That's a problem. It looks like we took out these lows, but it's 76 points. If you didn't have an aim point necessarily. When we get down here, I'm going to move this back. We put up, this is a breaker here. It never validates. Well, maybe there's a fair value gap and candle bodies above. I don't know. The last down close here looks like these are dead equal. There's a red one. So yeah, breaker could be here. You could try to take one of those. I don't know how many points that would be. So this would be our breaker. Our entry would be somewhere around here. We wouldn't get filled till this comes down. But tick above there. That's 35 points. This one would have wicked you out if you didn't have at least 35 points on. This one would have got it. This one would have been a nice one. You would have got enough points. So let's look at it. The last up close before the run on liquidity is right here. I don't think you'd get an opportunity to enter here. So we've got two there. We've got two trades there. No entry opportunity. And it's also later in the day. We like to see these things occur. I like to see them occur between like 1:30 New York time. Is when I see a lot of them start. And then earlier in the day between 10 and 11 New York time is a good time to see these things start. So that's the way I've been doing the back testing. And I've gone back now several days. I've got, probably 6 weeks worth of back testing. This one off the open is kind of neat. I haven't thought of doing it like that way before, but I've seen it happen multiple times whenever we we move, we go one particular direction, or there's a gap and we fill it, market breaker, and then just see how price reacts around that breaker. And it's pretty good. So through all my back testing, I've found that these moves, once we come off of a breaker, if we measured this entire move, that's a lot of points. That's the kind of points I've been looking for. Let's see, that would be 125 points to the high of that. Well, I've found these moves like this typically, the average of all the ones, the highest one I found was let's see, 284 points. I had another one that was 289, but it was to the downside, and a 306 to the downside. I did not include FOMC week because I don't think that's a normal week. But the average of all of them, if I omit those really big numbers, I think our average would be a little bit lower. But 115 is what I got with all the big numbers added in. I would say those were the extreme. They didn't happen that often. Moves over 150, let's say I only had 1, 2, 3, 4, 5. Okay. The most of them were, I think that's 6. So maybe 6. Most of them were around 100 points. And so kind of use that as an average. The lowest one, and that wasn't in the afternoon. The lowest one in the morning was 71 points. A 71 point move between the open and noon. Okay, so that's the lowest I saw. And so you can kind of use that as a guide. You're not going to get a 200 point move every day. In 6 weeks, it only happened a handful of times. So don't expect that. But you could reasonably expect that the lowest one here on the morning session was 71 points. So you could use that as your guide and say, okay, I'm going to try for 50 points or 60 points or whatever when you see one of these moves in the morning session. Will you leave money on the table occasionally? Absolutely. But then there's also usually a reversal in the afternoon session. And let's just say, hypothetically, you grab 50 points on this one, another 50 points on this one, or maybe you just, let's say you have 50 points you're going to take off 75% of your position. So let's say you do 10 micros. That would be a big stop loss for 10 micros. 25 points on 10 micros is $500. So let's say you do 5 micros. You take off 4 of them at 50 points and you leave 1 running. And it gets another 75 points. That's another $150. You could do that. But the idea behind all of this is to get a consistent number that you can reasonably expect each time we get one of these reversal patterns. Because what I've been doing is, I look up here and I say, oh, well, there's a high here. Oh, we had a gap yesterday. Maybe we can fill that gap. And we did. For this high. On this one, we did absolutely do it. So you could aim for those things. But if we have a static number that's very, very common, we're seeing like 100 or like 50 or 75, an average, a good average, then you can just set a static and say, okay, I may not get the entirety of this run, but the odds are in my favor that I can get 70 points on this run. And so you just put that in the bag. The next reversal pattern, maybe you get it again. And 70 points a day, even on 1 micro, it's going to pay you 140, and if it does it twice, 280 on one micro. That's not bad, and that's very low risk. So that's the way I've been doing the back testing, and it has been working out pretty well. So let's look at this. The market opens, runs down, finds some liquidity down here, and then it pops back up. We don't know where the market is referring to liquidity at all here. All we can say is we came down and we came back up. So where's our lowest point after this first little run? We would mark a breaker, potential breaker, the last up close on this run down. And then we wait for it to validate. It never validates. See that? Never does validate. Let's say it moves away from this breaker with a fair value gap and you go short. And this is just something I've been looking at as a possible trade. First rattle out of the box, because you will sometimes get a big move at first rattle. So look, we just meander around till 10, and then finally we get a fair value gap with a downside. Our entry would be here. How many points would we get? I'll just use this one because it's prettier. We enter right there, and we aim down here. Looks like we're getting about 87, 88 points. Let me measure it again where we can actually see the bottom. Right there is 85 points. So that would fit our criteria if we were aiming for 50 points or 70 points or whatever. That would fit it. And I don't know if you could call that your breaker or not. Maybe this run up, we use the last down close candle here as our breaker. But we're waiting for something here to validate. That's why I picked that one. Look, we ran down. This is the lowest point. We're waiting for it to validate, and it fails. And when it fails, then we can look for a short. Or you could say, this is the last run up, and this is our last down close candle. Same kind of a situation. We mark that as a breaker, and when it fails, with a fair value gap, enter here, and we go south. So that's something, it's early in the day, but it could possibly turn out. Sometimes it's a lot cleaner than that. Now here we have the one where the green candle is also the low. You can mark the top of that as your breaker, or you can wait for it to come up here. I'll just move it down here. Make that our breaker, and then we would wait for candle bodies to close above with a fair value gap. So as it's forming, we're measuring to see how big our stop needs to be. So if we were going to enter right here, our stop would need to be at least below the breaker. You might even go below this little fair value gap right here. But 25 points, I think this one might have got you out. It would have been a one ticker, depending on your entry. If you entered in the exact one tick below the low of this candle, you'd be fine. So I'm a little higher than that. We would enter right there. 25 points would keep you in the game. So 25 points, 5 micros is what I would trade in that situation, because 25 points will get us below the breaker. And this is a fair value gap right here too. And so I might even put my entry right there and call this my breaker, because I've seen these work as a breaker a lot. A very, very lot, a whole lot here lately. So that would keep you in the game either way. Or you could wait to enter up here. It's fine too. So if, let's say you entered up here, we get filled on this wick down right here. What's our reasonable expectation for profit? I mean, on this one, it goes up quite a ways. It doesn't take that high, but it does go up quite a way. This is 11:30. This happened. We're chopping around all morning. So we enter here, and we can aim for this high right here. That's 57 points. The entirety of the run is 101 points. So on that particular deal, that's the 16th. If we were just going to do a static take profit of 50 points and leave one running, we'd have made really nice money on both of those trades. And whether you entered here or entered here, I mean, you could enter right there. That is a fair value gap. You just have to be patient during that chop. And so if you add that chop in, I mean, that's a pretty good run right there. We'd be entering right there and going all the way to the high is 121. Maybe you get out on a pullback like this. I would trail my stop on that runner, but do a static. Get 75% of your position off at your average number. And I'm just looking at that low end, looking at 71 as a possible. Let's just do an across the board we get out. Or maybe even aim a little lower. 50 points on 5 micros is $500. If you're seeing that twice a day, that's pretty good. Can't complain about that. On 1 micro, 50 points is $100. That's $200 a day if you see it twice a day. And you typically will. If you're just doing 50 points, you typically will see it on a reversal. But maybe you do 2 micros and leave 1 running. I don't know. But the fact of the matter is, most of these reversal patterns produce at least, the average I saw was 115 if I add them all up. But if I remove all the high numbers, those are the extremes, and we just go with the middle numbers, we're looking at around a 100-point move, a little over a 100-point move average when we see a reversal pattern. So will you want to aim for that every time? I would say go for the low number. My low number so far, I'm sure there's others that isn't this big, but my low number was 71. So just use that as your benchmark. Maybe you make some consistent profitability. The home runs are wonderful. They're big numbers. You can go, yeah, I made this much money today, whatever. But that's not what's going to get you rich on this game. It's consistency. My very first mentor told me, it doesn't matter if you're only making $20 a day. If you can do it consistently, over time, that's going to grow. And the only difference between $20 and $200 or $2,000 is the number of contracts you buy. So you've got a consistent system that's producing money every day. Say you're starting out at 1 micro or 2 micros. Well, a month from now, you're going to have enough money to do 4 micros. And so you're going to be doubling your income there. But the fact of the matter is, without that consistency, the money's going to come in and it's going to go away. It's going to come in, it's going to go away. You got to have consistency. Will you win every time? No. There was one day I looked at where breakers validated and failed multiple times on this run up. Maybe I can see it. And it was in one day, and it was a directional day. Let's see. This might have been it. Yeah, I think this might have been it. I'm going to get rid of these lines just so we can see this. So my other back testing, I was wanting to see how often do we have breakers that are validating and then that one fail. Okay, so here we have this big run up. And we have a breaker. Oh yeah, this was definitely the day. We have a breaker right here. It validates with a tiny little fair value gap, but there is one there. And then we don't even take the lows, and it fails, makes a new high. And then we come up here, we mark another breaker. It validates with a fair value gap. We get filled there, and it makes a new high. So there's two. If you're betting $250 each time, there's two that's already failed. So you're down $500. We come up here. I think that's it. That's the only one you see. No, maybe we might have one more. No, that was it. And this one actually is successful. Oh, there's our green. So this would be our breaker right here. That one would actually have panned out, but you'd already been down $500. Are you going to trust it this time? Time of day is at 2 o'clock. We have candle bodies start closing below here. I would want a better signal. Fair value gap down, enter here. How many points could you have gotten on this directional day? Directional days are difficult for reversal traders, you know. Enter there. And we only had 41 points. So this day may have been a wash day. It may have been one of those days where you're like, you know what? I've lost $500 trying today, and it just didn't happen. Days like this definitely will wreak havoc on a directional trader. What I've done when I've seen multiple times the breaker validate and fail is I just go ahead and go long with a few micros and try to recoup some of my money. Maybe I don't have a winning day, but I'm not going to bet the farm on it like I would a beautiful reversal pattern when it's already failed twice. So say I'm down 500. When this one fails, oftentimes it'll come down and touch the top of that breaker because the market is still referring to this candle, believe it or not. And so it goes back above and it comes down and touches the top. I would try to get in right there close to the top of that breaker as I could. With just a few micros, stop goes down here. We can't have it too far away because we can't bet the farm on this. But let's see how many points that would be to the bottom. That's 24. So you'd be 25-point stop. A couple of breakers. That's $100 stop. And then just let those run because you don't know once we're going up like this, you don't know how high we're going. Maybe you could look at a time frame, a higher time frame, and try to figure out some sort of an aim point. But at this point, you're just trying to recoup some of the money you lost on the two failed attempts right here. Because the market is obviously not wanting to reverse. It's after 11, and we just keep grinding higher and higher. So that's a possibility. I've noticed that when breakers repeatedly fail, if you have two losses and the market continues to move higher, that it's most likely going to continue to grind higher for the better portion of the day. Well, that's all I have on this. I encourage you to do your own back testing because that's going to build the confidence for you and your system. And just to recap, and all the back testing I've done, if we get one of these reversal patterns, one of these sweet looking things, typically you can expect on the low end 71 points. I'm going to just go a flat 50 points because there are some where, like this, it didn't quite make it. It was only 33 points, but it was also late in the day. So between the hours of 9, 10 rather, let's say 10 and 12 New York time. Sorry. Would be your first one, and then between 1 and 2:30 or so New York time would be a second one. It's where I want to be looking at. Typically, you can get So remember to be kind to yourself, be kind to one another. I didn't even look at the next week's price action. I could do that real quick here. Let's look at a daily chart. I really don't know that I want to put any hypos up because I've pretty much been sticking to one rule. I've put myself on restriction because I've been doing some impulsive trading and I've got to stop it. On the daily chart, you can see we're in a nice little range. We got highs and lows here. We just took that low. If we're looking at this as a 1 minute range, I would expect it to go up and take the highs. But we had something happen that I've never had happen during a time where I was trading. I mean, the average highs that we've been poking is right there. So maybe that would be our range. How many points is that range? Not very big, really. The entirety of the range is 500 points. Wow. Getting into the bottom of that range and expecting it to go to the top of the range, that'd be really nice. But it doesn't always do that. And then we have these days. These are range days as well. So we had a range, and then we moved higher, and we're having a range here. We could move lower and have a range here, or we could fall out of bed. But we bombed Iran yesterday, and that's kind of like, it's definitely an escalation. It may be like considered, oh, we're at war with Iran. I don't know. And I don't know how the market is going to react to that news. So we may see abnormal movement this week. I hope not. I hope we can get some nice reversal patterns and I can grab 50 points out of each day, but no guarantees. So I don't really want to do a hypo because of that. And what I've been doing with my big plan here is, just being very honest and very, very strict with myself. I'm a reversal trader and I only take trades at higher time frames. So daily, weekly, 4 hour highs and lows. I'm not going to go into much intraday time frames like 15 minutes or anything. So when a high gets taken on a 4 hour. So based on that, and I usually use extended trading when I'm marking my 4 hour charts. One thing I noticed on Friday when we were coming up, we took these two highs, but we didn't take this one. We left it. And maybe most recent swing highs is what I don't understand why we'd have left that, but we created relative equal highs on the daily chart right there. I mean, on the 4 hour chart right there. And we also we have this little fair value gap down here on the 4 hour chart that we've wicked into a couple of times. So, but my rule, 4 hour chart, highs and lows. When a high or low gets taken, that's when I can look for a trade. And that's just to keep me on the straight and narrow. So there would be a low here. And let's say a high here. And I would mark them out and label them 4 hour. And then, let's see, I'm going to go ahead and label it. And so I can just clone. I'm not going to have a ton of these on the chart. I'm not going to mark through every single one. If this one gets taken and we continue up, I'll go ahead and mark this one. If it gets taken and we continue up, then we'll be looking at this one. And if that one gets taken and continue up, then I'll mark that one. Might go ahead and mark it just because it's relative equal highs up here. So that way we have a few benchmarks we can reach for. And on the downside, I would do the same thing. And that's really kind of it. That's all my chart work. It makes it a whole lot easier. And then we got that volume imbalance, so we could put one there. And then we could put another one here. Right there. So we wait for a 4 hour low or a 4 hour high to get taken. And then we watch for a reversal pattern. if there's one present, we act accordingly. And it simplifies things quite a bit. If that's all you're doing, you're looking for trades here and here. Oh, I missed one here. It's supposed to be right there. There we go. Okay. So we're waiting for one of those lines to get taken, and then we're acting accordingly. This volume imbalance is interesting there. That means we open with a gap up, I guess. But I think I'm going to go ahead and end the video here. I don't want it to be too terribly long. So Monday's hypo is look out. We bomb somebody. Might be a volatile market. Remember to be kind to yourself, be kind to one another. Love each and every one of you. If you have any questions, leave them in the comments. Or you can join the Facebook group and send me a message on there. If you haven't subscribed, please do so. Until next time, trade well.